Hello everyone, this is Martin and welcome back to another weekly video. We're going to be looking at trading with the Easy Read charts and going to be looking for trading opportunities for this coming week, June 11th to the 15th. Now, it is a beautiful sunny afternoon here in Toronto, Canada. And it's about 24-25 degrees Celsius. So I want to say hello to all the new subscribers from around the world, and especially to my loyal and long-term students and friends, trading friends right here in the Toronto and surrounding areas. So we're going to be looking at charts in just a second, and just to let you know, last week, if you watched my video from last week, you could have made over 450 pips. This included 6 clear winners and 1 loser. And I'm actually going to look at 2 or 3 of these trades from last week and show you exactly what I did and what I was looking for. So now we get moving to the disclaimer. Okay, you can read this disclaimer right here. And at your own leisure, you can pause the video and just read it. But the main thing is that I produce the videos for educational content, and I'm not giving you any real investment advice. So always view this video at your own risk. Okay? Okay, let's start, and we're going to start with the EURUSD chart. This is a daily chart, meaning that each and every price bar you see here is 1 day's worth of movement. And you can see I've drawn a red vertical line. Everything to the right of this red line is what happened last week. So we had 5 trading days, okay? And the first candle, see this white bullish candle, that's the combination for Sunday and Monday's trading. Sunday, the start of the Forex trading week, is usually very low volume, and so this broker combines on their charts the Sunday, Monday trading in one candle. So we got Sunday, Monday, Tuesday, Wednesday, Thursday, Friday, and this is for the first time viewers. Okay, so this is what happened. You can see last week we had a nice turnaround from the swing low here. Price went up, and note that the Easy Read charts show you the next resistance area, and a lot of people forget about this. Moving averages are fantastic when it comes to support and resistance areas, and here you can see this area between the blue and the pink. That is a resistance, and you can see price went up, and price bounced back down from that. And then on Friday we had kind of a bearish day, but then the bulls or the buyers brought price up again. So from here, it's kind of a wait and see whether price goes higher or price goes lower. And I've given you 2 ideas here. If you're looking for a buy trade, look for buys above 118.12. If you're looking for a sell trade, look for sells below 116.46. So those are my levels. That's what I'm looking for this week. And last week, just quickly, I did tell you about a buy trade above 117.24. 117.24. This was in last week's video, which is right about there. And if you would have gotten in, you would have made 73 pips. Okay, so you can see price went up immediately on last week's trading. Okay, and your stop would have been there. So there you go. That was the EURUSD. Now we get to the British Pound USD. Same thing pretty well. You can see price turned around right here. Okay, last week you could have made 39 pips, not as much as the euro, but again, you could have made it because I had an entry just right about there. And for this week, I'm looking for price to possibly continue going higher. If you think price is going to go higher, you could look at buys above 134.56. To the downside, I've got the level down much lower here. You would have to wait for price to come down below 132.76 before getting into a sell trade, and then confirming that the downtrend is intact, okay? Because right now you can see we're in a downtrend, okay? This is a pullback. That's a pullback. That doesn't mean that we are reversing. We may go higher to our next resistance zone, which I've drawn in the gray rectangle, and you can see this 200 SMA. Okay, that acts as a very strong resistance as well. So price could go higher up to here, okay, and that would be the target area. Price could go down to here, and that would be the next target to the downside. So that's what I see here. We're going to now move on to the next one, the Australian USD. And let's take a look here. This one, there was no real trade opportunities with the levels I had in last week's video. Nothing really triggered, and nothing looked like it was going to work. So there were no trades, but you can see we basically are going sideways. So I had drawn in this channel line, and this is part of price action as well, understanding price patterns. And when it comes to price patterns, we're looking at channels, flags, we're looking at triangles, whether they are ascending or descending triangles. But here we have a channel. So, and I predicted this, and I saw this coming like about a week, a couple of weeks ago, because I had drawn this in for a long time. Just, you know, go back to my video and take a look. This you can see these trend lines in this channel drawn in already in the last few videos. So price basically here is kind of predictable, going up, down, up, down, up, down. And from here I see price probably reversing higher once again. If you think price is going to go higher, look at buys above 0.7633. To the downside, you'd be looking at sells below 0.7546. Okay, so let's continue. And after the Australian USD, I usually talk about gold, because the Australian currency is tied into gold. So let's move on to that chart. And let me just find it. Here we go. Okay, you can see gold has kind of just gone sideways. In fact, take a look down here. This is just a filter to kind of give you an idea as to generally what is going on with gold. And you can see the blue MACD line here. It's just sideways. There's no momentum to the upside, no momentum to the downside. It's just stagnant. So gold is not going anywhere. And for gold for you to have a bias, whether it be an up or down bias, you would have to look at this area here. Okay, take a look. Okay, so we are basically in this kind of a pattern, and gold would have to break out either higher. We've got resistance above here. Remember, resistance is in these zones, the pink below the blue. That's one resistance area right here, and people forget about that. These color zones, by the way, are made up of moving averages, and some of the most powerful moving averages that are used in the trading profession, including bankers. Okay, just to let you know, and this one here, the blue line, is the 89, and the 200 is probably one of the most prominent and strongest moving averages you can find. They both are currently above price. So even if price goes higher, there's going to be a problem right here in this area. And of course, we have more resistance here. So just, you know, have some patience if you're trading gold. Okay, let me remove that. Let's get on to the next chart, New Zealand USD. And just like the other major currency pairs, price turned around. You see already several weeks ago, it's gone up. It actually broke through resistance of the color zones here, but it's kind of sideways again. So this is almost like a flag pattern. It's a bull flag pattern, where here's the flagpole, right there. Here's the sideways movement. You can see sideways here, and price either will go higher to at least the next resistance areas, the 200 EMA, which is above price, this 89 as well. And if you think price is going to go higher in the short term, I'm not saying this is a long-term play, but in the short term, you can look at buys above 0.7063. On the downside, price would have to come all the way below 0.6947 for me even to think about a short-term bearish play. Okay, so these are just my thoughts. Again, these are my opinions, and you can do what you want with them. Now, let's go on to the next pair, and we get to the USCAD. Okay, now this there's a couple of things going on over here. First of all, price is just sideways. Okay, take a quick look at the candles. As of last week, we had a small bearish candle, a long attempt for the buyers to bring it all the way up, but sellers brought it back down. That's why the white candle body right here is fairly small. Then we had another bearish day, another bullish day with a small candle body, and then a much more pronounced bearish day on Friday with a tall shadow or wick behind it right there. Thinking that price may come back down to retest this area right here. Now, the other thing about the US dollar, and not only with this pair, with other pairs, now I want you to pay attention, because this Wednesday is going to be a very important economic trading news for the US dollar. It's called the FOMC, and there's also going to be a rate decision, and I believe there's some consensus that the U.S. will increase their interest rates, and that happens at 2 o'clock on Wednesday afternoon. So if you are in any trades with any of the major pairs, beware of that there could be huge volatility this Wednesday afternoon because of the FOMC and the interest rate decision, all coming around 2 o'clock Eastern Standard Time. That's 2 p.m. Wednesday afternoon Eastern Standard Time. Okay, so here I expect prices to keep going sideways for this coming week. And again, you could look at buys above 130.43, sells below 127.76. Okay, now we move on to oil, and I usually talk about oil because oil works in tandem with the Canadian dollar. And you can see oil has been coming down a bit. It's bounced up off of the support. This is support right here, and but it's not really closed above this the speed line. So we're still in a bearish pattern. Okay, and again, this is wait and see. So wait and see. Price could go higher, but it'd have to come. You see this big candle right there? Okay. Look at that candle. Price of oil would have to be above there. Let me just draw that in for you right there. Okay, so price of oil would have to come above here for you to think about buys, and down here to think about selling oil. Okay, that's for this coming week. Let's move on again. Let me remove that. Now we get to the U.S. Swiss franc, and you can see it's the opposite of what's happened in the first few major pairs. So here prices come down off the high here, come right down, broken a long-term trend line. Okay, so long-term trend line, and now we're sitting in, you see where the green and blue colors have come together? We're kind of very close to what's called a momentum squeeze, which means there is very little momentum in the markets. So when you see this, you have to have some patience and take a look down below. Okay, so down below you see the MACD blue line right here, completely sideways. Right at the red signal line, you see almost no momentum bars here. So price is just sideways, and again, a lot of movement is going to happen probably either prior to Wednesday or after Wednesday afternoon's FOMC rate decision. Okay, so in the meantime, if you think price is going to go higher, look at buys above 0.9889, and to the downside, price would have to come all the way below 0.9678 to give me confidence that price would be going lower. Right now, it's just a wait and see situation. Okay, let me take that off, and we're going to move to the US Japanese yen. Now, this was a big mover and a big moneymaker for last week. Well, okay, it wasn't as big as I thought, but it was still good for 43 pips. I had a buy above 109.73. Okay, let me just take a look. Actually, I'm going to use my crosshair tool to be more accurate. So I had last week's video. I said you could look at buys above 109.73. Okay, which was right there. See where my crosshair tool is? Okay, right there where I'm pointing. So getting into a trade there, your stop loss would have been here. You would have made from here up to there. Okay, because the next day was just a non-directional day. It's doji, and holding on to the trade, even closing the trade. If you were spooked out, let's say you got in. You got in at the price level that I had mentioned in last week's video. You know, always close at least half your trade and try to let the other part run, but you would have made 43 pips in this case. Okay, so let's just remove that. For this week, I see buys above 110.24, sells below 108.64, and this always, the US Japanese yen is always a big mover in response to the FOMC rate decision, which comes out this Wednesday. I can't reiterate this enough, and pay attention because there's going to be some volatility this Wednesday, so pay attention to that. Okay, so let's remove that. Let's get on to the next chart. Now we get to the Euro British Pound. This was good for 47 pips last week. So a lot of the anticipated trades that I was looking at didn't make a lot of pips, but there are a couple of really big winners, and we'll get to that in just a moment. So here you can see Euro British Pound. This was good for, well, I'm sorry. You could look at buys for this coming above 0.8805, and you could be looking at sells below 0.8686. Okay, so that's that. And then now we get to the Euro Japanese yen. Now this was a big winner, and this was also a simple winner, because I had stated, let me just look at my notes here, buy above 128.23. Now I'm going to draw a line. Maybe that's probably the best way to do it. And I would advise everyone to do this. When you get my levels, again, I'm not giving you investment advice, but the first thing is draw a horizontal line, leave it on your chart at the levels that I post in my weekly videos. Now, last week I said buy above 128.23. So let me just draw that in. Okay, 128.23, about there. You can see it's just approximate, this red line here. So I had stated a buy above 128.23. The first trading day, if you would have gotten in here, well, this is Sunday, Monday, so I normally do not trade Sunday, Monday, but this is what happened. The very first candle, you see the white bearish, the white bullish candle, I should say. I would have placed a pending buy order right there or just above 128.23, and this is what you would have made. So let's say getting in here, your stop, well, your stop would be below the 8, but I would go below the the previous candle. This is the signal candle here, and you would have made 1-to-1 there and a little bit more. But this last week, this would have been good for 144 pips. This was an easy one because, I mean, the level I stated was almost dead on, okay? So just keep that in mind, keep watching, and I would draw in your let me just take everything off. I would draw in your levels just to show you. For this week, I'm saying buy above 129.84. So what you do is put a horizontal line right there. Put another horizontal. Just a second here. I'm gonna try to. There we go. Place another one right there at that level. Okay, and that's the first thing that you do. Then the second thing is. Switch your chart instead of, and these are daily charts. Now, you can just look at your charts once a day, but if you want to catch an earlier entry, and especially for those people from around the world who have the advantage of being awake or trading during the European session and that, switch your charts to the 4-hour charts. Okay, I'm going to do that. Okay, I'm going to do that. Now, I've got the levels. See the red line right here? There's the red line, and then there is this red line right here. Okay, so these are my levels for this coming week. And now, on the 4-hour charts, just wait for price to either go above here. Now, you can see on the 4-hour, you've got the moving averages. Averages have changed a bit. Here, the 200 EMA now is here, acting as a real natural resistance. Here's a swing high. Here's the 200 moving average. Here's the box I've drawn in, which acts as resistance. So you could wait for price to break here if you want. Place a pending buy stop order there. And same right here. See, this is the level right there where you want to look at for early entries for your pending sell stops, or just below the red line, the level I have indicated, and then look for sells down this way. So trading doesn't have to be difficult. You just have to know what to do. And I've shown you that you can. Let me take that off. Let me go back to the daily chart, because that's what we started with. Trading doesn't have to be difficult. So draw in your price levels and then just keep watching your charts. You don't have to be an expert technical chartist. You don't have to know about Fibonacci analysis. I mean, the easy read charts, I'm giving you some pretty good ideas as to what's going on to begin with, and then I'm giving you some levels for you to consider. Again, remember, I'm not giving you true investment advice, just telling you what you could be looking at. And depending on your own trading system or your trading style, you can adjust what you're doing along with watching what I'm doing. Okay? You can watch and learn that way. Now, let's move on to the next chart, the EUROAUD. This was good for 83 pips last week. If you don't believe me, go back to last week's video. Okay? Again, I did say sell below 153.81. However, and that was 153.81 was up here. And this is interesting. If you did not trade on the Sunday, Monday, you would have missed the 83 pips. The next day went up, and again, if you would have gotten in, see, there's no reason to get in there. And so you wouldn't have made a trade if you did not trade the Sunday, Monday. So that's where the 83 pips came in on that first day. Okay. For this week, I'm looking at buys above 155.53 and sells below 153.46. Okay. Now we move to our last pair, the British Pound USD. Let's take a look at this. This is a big mover. The average true range every day is around, well, currently around 125 pips. So every day's worth of price movement right now on the average has been around 125 pips. And you can see what's happened. We had a huge turnaround again, right? A U-turn right here at the support. Price went up. we are in a downtrend. I mean, hopefully you can understand that. When we have pink below blue, you're in a downtrend. The conservative traders should be looking for sell trades. The only question is, when does the sell trade appear, or when do you have a signal for a down trade, right? That's the next thing you should be thinking about. But right now we have price did go up. It's called a pullback. Let me take that off here and take a look. You don't need any fancy indicators. You don't need any technical major experience. And take a look. This the pink below the blue, that area, that dividing line is a natural resistance area. Okay, so we have natural resistance right here between the pink and the blue. We have a turnaround candle right here. This is a reversal candle off of a long-term trend line, which I had on my charts for a long time already. Guys, I've had the trend line on. This is a natural resistance area as well. So right now, we have to be careful. If you think price is going to go lower, then you could look at sells below 146.05. And even though it's close to a round number, I still see price coming down to here on the downside if it breaks this level. For the upside, you could be looking at buys above 148.24. But again, we have the you see the red dash line is the 200. The blue line is the 89, so that's natural resistance as well. And the blue, the top of the blue is natural resistance. I mean, look at your charts. Look backwards. You see, price did not go above this blue area, okay? And there was a price stopped with this candle right there at the blue, but then did go through. And again, here, take a look, okay? So I use colors on my charts to show you easily and quickly the support and resistance areas, and hopefully with my levels here, you could look at the levels, see how you can always turn to the 4-hour charts and see if you can get into better entries as well. So I'm giving you quite a bit of information, quite a bit of knowledge, and if you're interested in more information on what I do provide, okay, then let me just take a look here. You can email me for your free 33-page ebook. My name is Martin, mskyj007@gmail.com. Include your first name. I expect you to include at least your first name so I know who you are. Email me and I'll send you and ask for the free 33-page ebook. Just ask for that. In the meantime, click on the subscribe button if you've been watching this video for the first time. For the regular subscribers, the videos have been on YouTube for now close to 2 years. And take care, everyone. Hopefully you learned something, and we'll talk to you again soon next week. Take care. Bye for now.